Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data. So this is highly regarded options theses week 4, and so I'm going to be going over some options data from a variety of stocks. I believe there are 23 on the list for this week. But before I get into that, before I get into the options data, I just kind of wanted to do a brief introduction, as I have been making some updates to the spreadsheet. And so, yeah, I just wanted to go over that before I get into the data. And so before I start, I should note that this is effectively just a trading journal for myself, really just a documentation so that I learn. Putting these spreadsheets together, making these videos helps me to be accountable, and then I learn from my mistakes. Learning by doing, and then putting all this stuff together, it really helps me to not just be looking at the data but interacting with it, putting it in these spreadsheets, and also recording these videos for you guys. And so also this is for educational purposes only, or really specifically for fun, and none of this is financial advice. Some, if not most, of these trades will be bad, and I suspect that most, if not all, contracts will go to zero. Options trading is very risky, so do take that into account. Like I said, none of this is financial advice. This is just a documentation for myself, and hopefully to entertain and educate you guys in kind of, my learning process. And I also should note that, any of the levels that I talk about in this, any of the prices, plans change. Every single second the market is open, things are changing. Things, every second outside of the market being open. When it's closed, the world's changing. So plans do change. So, I might not be carrying out some of the stuff that I talk about in this, because I'm just going to adapt to what is going on. And then something else that I wanted to talk about is that Unusual Whales is currently holding their Black Friday sale. And so, I, as of right now, am not a paid subscriber of Unusual Whales. I was considering doing it for this video, but actually putting these spreadsheets together has really helped me learn a lot of, small details about the options data, about options tables that, I kind of took for granted in the data that was available via Unusual Whales. And so, I, want to kind of lean into that, continue leaning into that, and just learning from getting my hands on this data. So while I do not have a subscription right now, I suspect I will get that annual subscription, perhaps for next week's video on next Saturday. And, just to point that out, here is the Unusual Whales website. And so the plans and pricing, if we do scroll down, also if we do see down here, Black Friday sale is going on until December 12th. You can get 15% off. And so, monthly memberships are $50, but with this sale, it's $42.50. Annual is normally $530, but with the discount, it's about $450.50. And so, the reason why I'm thinking about doing annual is because I had paid for the monthly for a few months just to kind of experiment with it, but then my budget got a little bit tight, and so I didn't have it for the past month, which has really sparked this, learning in Excel. And so, I just kind of view it as, definitely being worth it. But also, I think it's very important to not get overwhelmed by the amount of data, because I think it's good to kind of take baby steps in learning options data, just because there's so much information there. And so again, this, doing the spreadsheet and stuff, these videos has really helped me a lot. But I do think that having an annual subscription does make sense, at least for me in making these videos, and because I really like doing this stuff. It's a focus of mine. And so one of the benefits that really stands out to me about the annual versus the monthly, other than this 24, almost 25% discount, which is based on $50 a month times 12 months, 24.9% of that is going to be about $450.50. So that's where they get that from. But the things that stand out to me as being really useful, at least for this channel, I'm actually going to make move for this is that you see these two additional check marks down here. And so one of those is for data downloads. So all of the data that I go over in the spreadsheets, actually not all of it, but a lot of it, I get from Unusual Whales, and I've just been effectively taking screenshots of the data, pasting them as text, and then just kind of updating them from there on a daily basis. So having data downloads would make this whole process a lot easier for me, and I think that I'd be able to have perhaps more than weekly coverage of options theses that I have, trades that seem like they could be pretty nice. Also, portfolio tracker of like politicians and stuff like that. That might be kind of exciting. So that is included with annual, whereas, all of this other stuff, you get with the monthly or the annual. But anyways, this is not an advertisement for Unusual Whales, but, it kind of is going to end up being that way because I do use their data a lot. But anyways, coming back to the list here, I did want to note that all of these tickers that are listed here, there will be timestamps to them based on the ticker, so not on the contract, but based on the ticker, so you can check those out. I will go over a few of these that stood out to me over the past week, but before I do that, I did want to go into this updated, little thesis that I have here, which I try to apply for all of my positions. And so up here at the top, what I have is, I'm not here to fall in love with stocks. I'm not here to fall in love with contracts. And I am also not here to be greedy. So I kind of have this little table for how I like to take profit, how I like to manage risk. And since I'm still fairly new at actually, just being successful trading options, I've definitely done one contract at a time in the past and lost money. Also done that and made money. And so accumulating more than 5 contracts, that's pretty new for me. And so this is kind of my way of managing that risk. So, and again, I should note, plans do change. I don't always follow this table. It's kind of like a rule of thumb. And so with this, if I get one contract based on, technical analysis that makes me think, it's going to go in the money at some point, if I get, one contract, my goal is to take an 80% profit on that contract. But if I pick up a second one, my plan is to sell one contract at 20% and then sell the second one at 80%. So then total, I get about a 100%, swing there in total if it were just one contract. So adding those numbers together. But then if I were to get an additional contract, so getting into 3 or more, then I'm actually, maybe I need to think about how I have this numbered here with just the greater than ones. But, if I go to 1, then I'm going to do that. But then 2, yeah. And then, so this should probably be greater than 3. Then I would trim at 100%. So, well, I shouldn't say trim. I would trim at 20%, trim again at 80%, and then I would close my position, my third contract, at 100%. But then if I get a fourth contract, just to be managing risk, I would then trim at 10% because maybe it bumps up a little bit, but then pulls back down. And then if I get 5 contracts, I would trim at break even because if it goes up to my average and then pulls back down, I want to be able to trim so I could comfortably add back. And so this is just selling one individual contract at these levels. And so this one, the one I should say that is for if I have greater than 6 contracts, I would then go from 100 to 200% swing, 300% swing, all the way up to a 10 bagger, which would be 1,000% swing. And so, yeah, I'm just going to look at this and see, okay, so, yeah, I think that it's good to have the greater than equal symbol there because if I have 2 contracts, I'm not going to sell them all at 20%. I would sell one contract at 80%, one at 20%, and then I guess in kind of the reverse order there, the third one at 100%, then 10%, break even. And then from that point, if I have 6 contracts or more, I would be selling in increments of 100% swings. And so my goal at the end of every week is to end each week with no more than 20 positions, because if I just keep going higher, 21, 22, 30, whatever, I'm never going to be taking profits. And so the goal here is to be taking profits on these contracts, to not fall in love and to not get greedy. While it might suck to trim at, break even, I'm lowering risk so I could buy back more if it dips. And, just because I'm still learning a lot of this is for educational purposes only, and this is, my learning process. And so then just a few contracts that I did want to go over here, and I do have the little key here where I made money, lost money, holding, watching the stock, so not holding a position, am done trading or begun tracking, done tracking or begun. And so some of the ones that stand out to me, let's see. So here I began this GameStop one last week and I made some money on it, but I almost lost some money on it. And there's something that happened with it that made me realize, it was a bad trade. And so I got out, made a little bit of money, but I could have lost. And then these other two GameStop contracts, I just really like this date, the quarterly, or I guess half of the year, the expiration in June of 2025, just because that gives me plenty of time to swing these. So I'm not feeling the pressure of, contracts that end pretty soon. Another one that I did swing last week kind of unsuccessfully is this one for IBIT. I'll go over that. I did lose money on that one, as you can see the crying cat there. But from that, I did learn a lot, and I lost a very small amount of money. I think I managed the risk very well there, and so I will go over the justification for that as well. Other ones up here that stand out to me, the Luminar, or ticker symbol LAZR, they recently had a reverse split, which makes the strikes for these new calls and puts a little bit more interesting, and so I'll go over my thesis with that. But I am excited to be covering that one. And then let's see if I go down here. I'm just going to be going through this list. And so it should be, I think, pretty informative. And a lot of these, I'm just excited about them, whether it's just to watch or to hold. I think that a lot of these will be profitable as long as risk is managed well. I'm not falling in love and I am not getting too greedy. But anyways, I'm just going to bring Ed back so he can join us on this journey. And I am going to begin this with AMC. And so this is an $8 call that expires on January 17th of 2025. So just a couple months away. I had previously traded this. I made about 20% and 60%, totaling $14.72 after fees. So it would have been about $15. So I feel good about that. It's not an insane amount of money, but it is profit. And if I get more comfortable with this, I can double up, triple up on those contracts and, double up and triple up on that profit, whatnot. Hopefully, 10xing that, at some point in the near future as I do get more comfortable with this stuff. And so here, what we can see with this contract is that the average price for that premium, which is in this column here, all of this data I get from Unusual Whales. And so what we can see is that the premium had come down along with the stock price, that's in green. And then, I established a small position here and I took profits as it went up. Could I have made more money? Yes, that's the nature of the game, but I could have lost money. And I could still be in it waiting, so I'm glad that I took profit on that. And some of the stuff that stands out to me with this one, I have gone over it in the past, is that we see this spike in volume here in blue, and that corresponds with the total premium on that day going up to, about $180,000. And following that spike in premium, we see the open interest in green also spike up and stay elevated. So that suggests that a lot of those who bought in here have continued to hold. Seeing another spike in volume over here, which also corresponds with a bump in the open interest and that staying elevated. And we can also see that that premium was actually higher than the one over here. The net premium traded on that day represented, over $200,000. And I can actually just look at that in the table here. It looks like it was about almost $225,000, almost $250,000 here. So pretty notable there. And then also, while we don't have the data for Monday, it does look like on Friday there was a spike in volume. If we do look over here in the table, about 3.5, almost 3.6 thousand contracts traded on that day. And so we'll have to see if the open interest stays elevated, if it bumps up, or if we actually see it pull back, if this was some selling. And so for me, for my comfort, this is a little too close for my comfort as far as the expiration goes. So I am no longer trading this one, but it's possible that, if the implied volatility or IV dies down, maybe I would pick up one or two, a very small position, a couple contracts to see if, I could capitalize on some fast gains. But right now with the implied volatility, I've really found that if it's above 100%, that is a little bit too risky. And that is the lesson that I learned with GameStop. So I'll go over that in a little bit. But yeah, this overall, seeing the open interest hold makes me feel good about it. But I could see, if I would have held, I could see this premium dipping below that average. And so the average that I had looks like it was about 19 cents. On Friday, we did hit a low of 19 cents. So, while I could have made more money, I could be at break even right now. So that's why it's good to, not fall in love and not get so greedy. And for me, at least as, while I'm developing this thesis and stuff, or these theses, to be following that guideline of taking profits. And so I effectively did that here, but this was before I kind of made that table. Anyways, the next contract that we will be going over is also AMC. This is the $8 call, but this one expires June 20th of next year of 2025. So I really like that expiration date just because it's plenty of time for me to maneuver. And last week, I do believe that I was not talking about taking profits, but then I made that table, going over, these taking profits. And since I do have more than, or at least did have more than 5 contracts, I decided to take profits. Not at 0%, not at 10 or 20. It was right around 30% at the time, and also 69 cents. It's a fun number. So I did sell one contract there, and then the next one would be at 80%. And if we do notice here in the table, I'm curious what the last or the average price was for that premium. We actually don't have the low or the highs for the day, and that's because I didn't get this data from Unusual Whales. I actually got this data just from looking at the options table, so I can go over kind of how to extract some information from those in just a minute. And I should also kind of go over my thesis with AMC, especially thinking about the June 20th expiration, since I am currently holding some contracts. So I'll do that in just a minute. Sorry, just a little bit scattered. Thinking about this here. So, with my average being at 53 cents, since I did trim at 30% here at 69 cents, I would then buy back that contract at 53 cents. So not adjusting my average. And if it goes below 53, then, I just continue to accumulate more. No big deal. I got plenty of time, over half a year before this expires. And so, looking at the options table, since I did mention it, and since we do have average and last here in total premium with that asterisk there, we can see that I put them in red, and that is because I calculated those values. So just looking at an options table, and I might actually pull up Webull. I'm sorry, it's going to be a little bit small, but for that contract, we can look over here for the June 20th expiration of 2025. These are calls. We can then look at that contract. And so right here, we have the $8 strike, and we can see all of this great data here. And so from this, I basically just copied the numbers from it. And so here we have the volume here, 78 right there, open interest, is 3,421. Copied that there. This plus or minus, that I just take by subtracting, taking the difference between these two. As you can see in the cell up here at the very top, I just take final minus initial to then get that difference. And so we see that there was actually a reduction in open interest between Thursday and Friday, and we'll have to wait and see what the open interest is on Monday to see that difference between the trading on Friday and then the open on Monday. The lows and highs, I'm not able to obtain that information, and perhaps I could. This is a learning process, but I really have just been looking at the table to get the last premium price. So if I look over here, that $8 strike, we can see the bid and the ask up here. So that's not the high or the low, or the low or the high. That's just the bid and the ask at close at the end of the trading for the day. And so I felt like that was kind of, incorrect for me to include those as, the low or the high. And so instead, I just include the last premium price, which was 70 cents. And so I just pasted that there. Whereas if I were to get this from Unusual Whales, like down here, I would have the lowest premium traded that day, the highest premium traded, as well as the average. And so I feel like that average is a better representation than this last, but it is a number that I can throw up there that's not too far off from what it would be if I was looking at the average. Anyways, the implied volatility, or IV here, that is looking at the table here, and really it's just like the percentage over here. So that's about 107. Got that typed in there. And then so total premium, this is one that I was not previously calculating, but then just looking at these spreadsheets, I realized how to calculate it. And so, if we have the amount of volume, the number of contracts traded on that day, that's one part of the equation. The other part of the equation would be the average price of that premium. But since I don't have that, I just have the last price, I can just use that. And since this is representing, each contract is representing 100 shares, I would then multiply that by 100 to get the total premium. And so if you can see it in the cell or the formula bar, whatever up there, what you can see is B7, this one, the volume, is multiplied by G7, the last premium price, and then I multiply that by 100 to get the total premium. And by doing some comparisons with what's on Unusual Whales, what I've seen is that these can be, maybe a couple $100 off, but, it's better than nothing. It does give a pretty nice idea. And so if one, is not ready to dive into Unusual Whales and paying for that subscription, I think you can get a lot of data just by looking at the options tables, kind of extracting that, although it is a pain to be compiling this every day. I spend at least an hour doing this every day, but it is for my learning, it is for my education, and I find that to be valuable, especially if I can make money with this information. And so, and then as far as the underlying stock price, that is just the closing price for each day. But anyways, I should mention my thesis with AMC, which I've gone over a number of times in the past, but really it's just that there's this gap down here right around 3, and there's gap up here right around 7. And so I think that price may break lower towards filling this gap, but I don't think that gap will be filled. I think people will be left waiting if they're waiting for that gap to be filled, and they will then FOMO in once price crosses above this gap, fills that gap, and then that FOMO momentum, all of that stuff will really push the stock price higher. So I think that, an $8 strike for June is a pretty safe bet, especially if I'm being conservative with how I'm trimming those positions. And if I take an even further step back, we can see that there's this, let's see, I don't have to take a step that far back. We can see that there's this other gap here right around 20, and so that will play into the next contract after this one. But here, I've just been adding, or I guess I trimmed, but I would like to be adding more at 53 cents at my average. So if we do dip to that next week, I'll add one more contract. I just do it one at a time, so nothing too crazy. But yeah, I could see this I could see this going two different ways. I could see this coming down and this getting filled, or I could see this really taking off. I think it's kind of tough to say, but I do feel like it will probably be going down again, and that is nice having this, more than half a year expiration date. So I'm not too stressed or worried about it. Other things that stand out is that we do see this open interest that is elevated and has been increasing, but this is not like the sexiest of contracts. It's more than 6 months out, so it doesn't get a lot of volume traded on it. So we don't see tons of open interest here. We got about 3,500 contracts or so, a little bit less than that. But here with a spike in volume, we actually saw a decrease in the amount of open interest. So that does suggest that, there was some selling on that day. And then if we look over at the total premium here, it does look like I kind of screwed this up because the total premium should be on the, actually, I'm not sure. Maybe did I screw that up? Yeah, I screwed that up. But let's see. I'm not going to adjust that, here. I'll do that later. But that is something for me to note. I try to make these consistent with the y-axis on the left being the blue and the y-axis on the right being for the green. And so just thinking about this, yeah, so these are correctly labeled. It's just that I need to swap them over here. And yeah, the total premium, yeah, so I can actually just do this really quick. So format data series, I believe that I do that, and then switch that to the primary, and then I'm going to select the green one, hopefully. Right, let's see. Actually, a better way for me to do this is to set this one. Sorry, I'm not going to edit this, but you'll survive. Crap. Let's see. Just like that. Format data series. And that should be the blue. Ah, crap. One second. It's just tough to click that green one with, there we go. I got it. Dang it. Sorry. I'm not going to edit this out just because I'm working this weekend and I'm tired. And so I'm just trying to share this information with you guys. So yeah, that is switched correctly. So whew, crisis averted. Anyways, I'm going to skip on to the next contract, but this is one that, I feel pretty comfortable about the stock getting up to fill this gap at some point. Maybe it gets rejected there. Maybe it pulls back. So, it's not something that I want to diamond hand. This is just a swing. The other contract, though, is, a little bit riskier for me, I would say, but it is long dated. It's definitely a leap. And so this is the $20 strike corresponding with that second gap, that higher up gap in the chart. And this is actually expiring January 16th of 2026. So I got more than a year for this one. So a pretty safe bet. And, while I'm thinking about it, just because I've forgotten to mention it before, I am including links basically where I basically got some inspiration, either their videos that I made or videos others have made, tweets that other people have posted. So I'm going to include those above me. And the plan is eventually to make these spreadsheets posted on Google Docs so you all can view them and you can, access these links easily. But yeah, I'm still just kind of, building the format of this. So not posting just yet. But anyways, and actually during these videos, I might click some of the links to show you what I'm referring to. And actually the next ticker I will be doing that. But anyways, with this one, I just got one contract at 35 cents, really not that exciting. And part of the reason why I thought, I should do something like this, I should have a more structured plan, is just because with this one, I got until 2026 to hold this. I don't have to worry about the expiration anytime soon. But, I don't just want to hold this forever, or at least hold this for an entire year and not make money with it, not take profits. I want to be a little bit more, shorter term. And so, while it would be nice to be holding a number of contracts for, like a 10 bag or something like that, Just holding one contract at 35 cents, that's $35. When we do have a blip up like this, it'd be nice to take some profits. So, that's kind of why I started that. If I have one contract, I will trim at 80%. And then if I get a second contract, trim that at 20 and then 80. And that's really just to, take advantage of moves like this where we see that average premium spiking up, but then pulling back. I could have made a good amount of money there going up 51 up to 51 cents. So that's, I don't know that that's 80%, but, I think it's just, I need to be thinking about taking profits on these and not just holding forever. Because, while there is a year before this expires, getting up to 20 is getting up to the top of the y-axis here, basically just a flat line right now. So, I think that this could just, waste a lot of my time if I am not taking profits. So, I do have a limit set to sell at 80% of 35, which, since this is Excel, I can just, multiply that by, let's see, 1.8. So I get an 80% profit. That would be at 63 cents. And so, it didn't go up that high. That would be above up here with 60 cents over there. But, just good to have that plan. And we also do see a similar thing with volume spiking up here. Open interest staying elevated, but it's kind of like moved up and down, kind of wonky, kind of weird. Maybe because it's so far dated out that, actually, there are 100,000 contracts, so I think it's just the reason why it goes up and down is because the difference here is just about 500 from 105,400 up to 106,100. So, it's it's 700. It's not too big of a range. So that's why it looks like it goes up and down. It's really just, effectively elevated there. And then also the total premium traded on this day looks like it was above 800,000. So that's a lot of money. And it's not a million, but it's pretty close. And so with that being said, I think it's a good one for holding, and to be, trimming along the way. And also, this is something I'm getting more familiar with as I look at this data, the IV, that implied volatility. During this spike, what was the IV? It was very, very low relative to, what's on the chart here. It was right around 92. And so from there, it has just gone up. Most recently, it's above 100 at 108. Excuse me. And so, you want to be buying these, making big buys like this, especially when IV is low. And so right now it's still, it's not super, super high. I've seen them go up to like 140 or so. You'll see some coming up. But yeah, I think that there could be better discounts. And so that's why I just have, a buy order placed for one more contract at 35, just adding one more contract to my position, not worrying about getting my average down, not trying to be greedy in that sense. But just to add to my position if I do get the opportunity to without lowering my average. So yeah, that's kind of pretty much all of my thoughts on AMC. So now I'm going to switch over to a new one, which, this is all based on a post that I just saw today, actually, right before making this video. I was looking it up. So I don't have too much data, and this is kind of, the hindrance of not having Unusual Whales, because Unusual Whales only posts the past 5 trading days. And so that's all the data that I have, at least from, what's already formatted from Unusual Whales. I could have looked at an options table to calculate more of this, but it's kind of a last minute addition. And so I didn't want to go too crazy overboard with it or anything. So yeah, just have these past 5 days here. And so the thing that made me intrigued by this one, which I should have started with it, is this is BlackBerry, or ticker symbol BB, with a $3 strike for a call expiring June 20th, my favorite date. And so the reason why I picked that strike and that date, well, that date because it's my favorite one, and that strike, it's really based on this tweet that was posted today by one of my favorite guys on X, Mr. Chart Norris. I think he posts a lot of great technical analysis. So this is what he posted. So the BB weekly candle chart. And so I just saw that and was just kind of intrigued by it. Looks like it's, potentially an inverse head and shoulders there, really just like these three bottoms. And, with this moving average, which, let's see, I'm not sure exactly which moving average that is, but whatever moving average it is, this is, on the weekly time frame, and we can see that it clearly has right around $3 mark there. So I thought, well, this is kind of an easy trade based on this thesis, although it does look like earnings are coming up. So maybe this is a little bit more risky than I would like. But, if we do look back at this, the premium is pretty cheap, only 26. So I do have an order placed to buy one contract at 26 cents. But in all honesty, I don't really expect that one to be filled. And so the reason for that is if we look at the date on Friday, so the 22nd of November, we can see that the range was from a low of 25 cents to 26 cents, average 25 cents. It does look like a good amount of contracts, not zero, more than 10, more than 100, 300 contracts were traded on Friday. But if I do look over at the options table, so coming back over here to Webull and looking at BlackBerry here, this is some prior DD that I did, or sorry, I shouldn't say DD, TA that I did. But I didn't really look at it. I'm really just basing it off of his tweet. If I do look at the options table, I look at the June 20th expiration for calls and that $3 strike, the sell order here, which is under the bid, that is at 24 cents, whereas the ask or the buy is at 59 cents. So just because I have it listed, or it looks like it's listed in that table as being right around 25 cents, I think in order to get a fill, it'd have to be right around 59 cents. So I don't expect my 26 cent limit order to be filled. And I feel like the reason why I say that is because it looks like, we formed kind of a bottom here, bounced, got rejected, whether it's related to that level or not. I drew that a while ago. Big wicks to the top side, so getting a pullback, forming a higher low. And now it looks like it could be starting to move. In their next earnings, it looks like, I guess there's not a specific date. So I have to take that with a grain of salt, but, it looks like it's coming up towards the end or the second half of December. But anyways, I think that this could be going up higher. And so with that, I think that the premium could be increasing. So I don't really expect this to get filled, but I think it would be greedy if I was waiting for 25 cents to be filled. And so with this, we see that the underlying stock price is right around $2.35. That's what it closed at on Friday. And so what we can see here is that, the premium has, it's kind of been flat, but it's been coming down a little bit. The underlying, it does look like it's turning around, starting to bounce. So that is why I don't think this will be filled. But if it does, then I could swing it for 80%, maybe just 20%. I don't know. It depends on how much conviction I have in this one, which is, in all honesty, not that much. It's just really having fun, seeing how, good his posts are, because I think that, he's a pretty good technical analyst. And then what we can see here, in all honesty, I'm probably just going to skip it because I've got so many of these to cover. And I'm not really making that fast of progress. There's not much data on here, but, look forward to seeing how this evolves next week. And I might even have more data going back in time because I'll probably have unusual whales next week. And one thing that I did want to mention, can't get ahead of myself, things that I am learning, paying attention to the IV. This is, less than 70%. That's pretty low. Relative to the past, I don't really know, because I don't have that data here. But let's see. I think that is pretty low. So that's like, the time to buy, not when it's spiking above 100. And one thing, I spaced out for a second there, and that was just because I was realizing that, I mentioned that I only had, these 5 days here that I got from Unusual Whales. Well, I could have just gotten that from an options table. However, no, I couldn't have, because the options table only gives me the data for the past day. So this is all that I'm stuck with. So that is, just another example of the value that Unusual Whales brings to the table, or options table, however you want to think about it. But yeah, that is the thesis for BB. We'll see if that gets filled. I suspect it won't, like I said, but even if it gets filled at, 50 cents, I think this could be, a nice swing. I just don't want to risk more than 26 cents, at least for establishing the position, just to start. Okay, and then so now I'll move on to the next one, which is Celsius. This is ticker symbol CELH, $50 call expiring March 21st of 2025. So a little bit sooner than that June expiration that I like, but, still months away. And so this was a position that I was holding, and I decided to trim it and trim it to the extent of closing out my position. And so if we look back here, I had bought, it looks like kind of crazy. I would have expected there to be more history. It's because I've been tracking it for a while. I've been watching it, but didn't establish a position. I did decide to establish a position on the 20th, where you see the little red line there. And then the following day, I swung it for a 10% gain, which, looking at this, that doesn't really make sense, because 10% is not going to be, $13. So maybe that should be actually 20%. Oops. But yeah, I did trim that, it looks like, for, we can just do the math here. So this times 1.2 is 79. So yeah, that was a typo. That was a 20% swing. Kind of an obvious mistake there. But anyways, yeah, I picked up one contract at 66 cents, and I was contemplating, well, do I want to do this for 80, like is kind of the plan? But I don't have too much conviction in this. And also, like, the initial thesis, my tracking of this, which was, another post by Mr. Chart Norris, that was based on, this inverse head and shoulders pattern. And if I do look over at the Celsius chart, that inverse head and shoulders pattern did not play out. It actually broke lower. But when it came down to here, I had these other levels kind of marked here. I think for my own analysis, also had an alert down here at 25, which we actually did not hit. We hit a low on November 18th at 25.23. And so sometimes what happens is, retail, or, anybody, whether retail or not, will place, orders at whole numbers, like $25 a share, but then it only dips down to about 25.23, so then leaving those people behind. So I was just like, well, screw it, it could be that kind of scenario. We could be getting a bounce, and so, I'll take advantage of that. Part of the reason, why I'm glad I got out of it, this looks like a spinning top. It could be pulling back. Maybe there will be an opportunity to re-enter. And so my plan is to re-enter if it does pull back to 66 cents. Premium, it looks like this was the last value. So actually, no, this is not the last value. We got the low and high there. So this is from Unusual Whales. The average for Friday was 99 cents, the low of 92 cents. I sold at 79, so I could have made, notably more money. Let's see, would I have gotten the 80% fill? 119? No. So, I think it's good to not be greedy. And so I wasn't greedy. I took 20%. I'm happy about that. Over the course of one day, made 20%. Just getting more comfortable with options. It's not a huge win, but these wins stack up. So I'm happy about that. And let's see. I just kind of wanted to go over some more of his posts, but I'll really just skip to the ones that were relevant over the past week. So this one from the 17th, which would have been last weekend. Oh, no, that's a video. So I don't want to be playing somebody else's video. That is from Colin Gladman. So I'd recommend checking that video out. You can read it there. I'll probably forget to put links in the description of the video. I apologize. I just don't have enough time. But yeah, a very good video. I'd recommend subscribing to his channel. He doesn't put out too many videos, but they're always filled with a lot of good information. And, and that was actually kind of what encouraged me. Well, maybe I want to see about a dip buy. And, seeing these days, I thought the bottom was in. I ended up being right, at least for short term. Then this other post, again, from Mr. Chart Norris. This is, him posting that this is coming to, this potentially finding support here. And no way, I mentioned the target in this chart, LOL. That was from the 19th. And I guess that was probably all from the same day, yeah, the 19th. And so I thought, why not? And then on the 21st, another post here, daily chart update, approaching upper boundary of descending channel. But I told you, I don't know who this person is. So I was just thinking, well, I see that. Maybe it's going to get rejected and I don't want to be holding the bag for a while. I'll just take profits. And so he posted this on, the 21st. When did I take profits? On the 21st. So I had a nice little swing. Had I gotten in earlier, I could have made more, but, I'm happy with this. And with that being said, just going back to the chart, I could see this pulling back and then maybe there being another dip buying opportunity. But also, maybe there's the problem of I made a little bit of money on this and I wish I could have made more. So I kind of fall in love with it. I'm greedy. I want to make more money. So maybe, it's bad to wait for this to get filled because, this is a winning trade right now. If I re-enter, it could become a losing trade. So good to consider that. And I should note, too, that the first post that I saw on this, where it was from November 3rd. And so, nice way to make 13 bucks. Again, nothing too crazy. But, going over the data here real quick. Volume spike, open interest holding up elevated, although it's not super elevated. And that spike in volume represented about $160,000. Not sure why there are the ones there, but it is what it is. And we did see kind of this dip in the implied volatility. And so where that was to like 73. So this would have really been, actually this is at like 90 cents. So perhaps, this is low implied volatility, but then over here, kind of where there's the no values, this is, getting into the range where it was really good to be buying as it starts going up, then to start trimming. So that dip in implied volatility, that was a good time to be buying. And also, just when the premium was low over here, before going up. But anyways, I think there's enough there on Celsius, so I'm going to skip to the next one, which is Fastly. And this one, I took a mix on this one. I did lose a little bit, but net, I've made money. I still am holding one more contract with an average price of 62 cents on that premium. But before I get into that, I should mention what this is. It is the Fastly, ticker symbol FSLY, $10 call expiring June 20th. Again, my favorite date. And so, I accumulated a number of contracts. It looks like I had 1, 2, 3, 4, 5, 6. I haven't, carried that one out yet. And, I had initially had one down here that I sold for a 40% swing. And then, it's like, okay, now I have 5 more contracts. I'm going to follow that table. And I sold one at break even, but due to the fees and stuff, I lost 14 cents. Not a big deal. Who cares? It's 14 cents. Thinking about it, like one Doge is worth more than that. So that's kind of crazy. But then, so that was on, let's see, what day was this on? Let's see, just trying to get my bearings here. So that one, I must have, so I was adding here. yeah, I had a lot of stuff going. It's just because I had limit orders placed. It came up to 62 cents. As you can see here, the low for that day was 62 cents, whereas the previous days, the lows were not 63 cents. The highs were not 62 cents, sorry. But the low on that day was. And so I trimmed at 0% at break even. I also trimmed at, 10% and 20% on that day. And then on Friday, it was pretty cool. This is my biggest options trade, based on these, this stuff I'm doing here, at least so far. But I made about $50 for an 80% profit. But now I'm just waiting for that 100% profit, which is, at 124, I believe. And so we'll see if that gets filled on Monday or next week. If it doesn't, I would just buy back another contract at 62 and then kind of reevaluate. And so, that's really, in my view, the beauty of having such a long dated contract. I'm not worried about that expiration date approaching, or at least I am not yet. And so as you can see, this contract that I had here, that I bought up here, spiked, I sold, took a profit, and then I waited for it to pull back, bought back in on these dips, and then, I've been trimming on this most recent rally, and, I feel like it's not going to get up to 124, and that it'll probably be going lower than 62, but, this thesis, I should note, this link here is to one of my videos, but I can just show you in the chart. Ooh, I don't know why I have a charge point on here. So I guess I'm only going over 22 different stocks. But it was really just based on this thesis. Somebody brought this up in the Ticker Request Live on Sunday, which I don't do every Sunday, but I try to at 9 p.m. Eastern. This was requested, and I noticed this cup and handle formation, or you can think of this as a double bottom followed by a bull flag. You could also potentially think about this as, an inverse head and shoulders. And so I viewed this as breaking out. I also talked about in the video, the one that I have on the spreadsheet, that I viewed like 703, where this alert is as potential a stop loss level. But I think, I didn't have a stop loss there. I was just holding one contract, and it's like not a big deal. Or I don't know how many contracts I was holding at that point. But, I was just viewing it as, I dip bought that because maybe it's a sweep of these prior lows. And so anybody who's long with a stop loss would get, stopped out at that level before dipping lower, hitting a low on November 4th of $6.91. And then, doing that little rip your face off rally going up over 20% over the course of a few days. And so I was thinking that was going to continue, but then it pulled back. I was like, well, it looks like it's testing the handle. Maybe it's going to go higher. But oh no, yeah, I had one contract here, and then I took profits up here. When it pulled back, I was thinking, well, hopefully it bounces. It's just testing that handle as support, but it actually looks like it formed kind of a bear flag, and I think a tell for it was this big wick to the upside, but maybe that's just hand waving, so who knows. Then it, broke lower, and then I started to look at this. I was accumulating here, and I had noticed, let's see there from, the move over here, from the base of that cup to the top over here, that corresponded pretty nicely with the 786 at like 621. The low over here was at 625. And so I really just kind of wanted to be monitoring the levels over here. And it did look like, an inverse hammer or like maybe spinning top, but really more of an inverse hammer, suggesting that there could be a bottom, big green candle up, bullish consolidation before this up 17% move. So, that ended up working out pretty well. I don't think that this cup is invalidated. And with this gap up here at $13, right around there, I think that my thesis is still in play going to $10. So that's why I would buy back if it goes back to 62. And if it doesn't, I'm happy to take 100% profit and move on. But yeah, that's why I'm watching this one. And as far as the data goes on here, I don't think I really covered too much of it. But yeah, it's pretty much just like, price comes down, goes up, and you want to be, maneuvering around that stuff, and that's exactly what I did. So pretty happy with this one in, just carrying out that thesis that I have from that table. Now what we can see over here in the volume, a pretty big spike a couple days ago, and that spike in volume corresponds with about $12,000. So that's a small amount of money. So like one YOLO, as far as Wall Street Bets defines it, is $10,000. So this is, 1 1/5 DGen YOLOing. So that's nothing too significant. But that open interest, was going up following that. But again, that open interest is only like, 180 contracts or so, or let's see, open interest 187. So nothing too crazy, nothing to be going on about, which is exactly what I'm doing, unfortunately. And so with that being said, I'm going to move on to the next one, which is FuboTV, ticker symbol FUBO. This is the $2 call strike that expires May 16th. There just weren't any with the June expiration. And so this one, let's see, I think I got 3 contracts. We can see those here that I plan to sell at 20, 80, and 100%. Actually, I think I screwed up this table that I have here. Oh, no, I got that right. 100, and then once I get to 100, then go. Yeah, because those numbers I did not change. Anyways, coming back to this, this is a learning process, so please forgive me, and sorry for the screeching of the chair. But yeah, what we see with this is, that I've just accumulated a few contracts, one here and then a couple over here. And, price has been price for that premium has been below my average, which is 30 cents. But since I had bought at 35, 30, and 25, I've really just been waiting for a 20-cent fill, which unfortunately was not filled on these days. I did have the order placed, also on these days. That, maybe that's like a bottoming signal. We did see that the implied volatility did dip below 100%, so maybe that was kind of a nice dip buying opportunity. But, it just doesn't seem to be breaking out. This level, my position there seems like it's kind of a level of resistance. But anyways, I should probably mention, the analysis that kind of sparked my interest in this. I think this date has to be wrong. But these are both, again, from Mr. Chart Norris. Let's see, this was from October 14th. That's just kind of fun. Kind of this inverse head and shoulders pattern. It's really just been consolidating to the side. So it has not been, that exceptional. But, it hasn't really been that long because I first started building my position on the 18th. Oops, you can't see it because Ed's there. On the 18th of October. So, it's a little over a month now, risking $35 at that point. Now, let's see. The average of, so it's $90. So not a big deal. But there was kind of a follow-up that he posted, and that was FUBO Bigger Picture. And this actually goes back quite far in time. So this is the monthly candles. And this goes back to, I believe, 2022. This big downtrend. So it definitely looks like there's something about to break out with this if it's not already broken out here. So, I have confidence in his analysis. I think that he's posts a lot of good stuff. I'm always impressed. Just very simplified analysis. So I appreciate it. And so I look forward to seeing how this one plays out. But then I can also go over kind of, what he had suggested. If I switch this over to the monthly time frame, we can see that what he's talking about. And so this goes back to the month of August of 2022. And then the other pivot point is the high from December of 2023. And so, yeah, we've clearly broken out. And then if I switch back over to the daily candles, what can we see over here? I was kind of thinking that this is like an inverse head and shoulders pattern, but let's see. And this still is the low, so, it's still, it's kind of, an ugly right inverse shoulder over here. And so I'm just viewing this as like the neckline, and from that neckline, that being right around the middle of that rectangle, there is a price target of about, let's see, 235. We also have this, purple line that was resistance over here at 186. And so for me, the strike of $2 makes sense. I think that price will be going above $2. Yeah, I've got until May. So, I think this is kind of a safe bet. I feel good about it. We can also see that, there have been a number of spikes in volume that haven't really, you can see that the open interest following this spike at least is definitely spiked up. This one, not so much, but just gradually that open interest has been increasing, so that looks good. Implied volatility is really not that high, even at the high from Friday of 101. It's not really that big of a deal. So, at least in my view, because I've definitely seen some that are a lot, higher than 100%. So, yeah, I feel good about this one. I'm hoping that this fills, but if it doesn't, if I do go back to the chart over here, it's like this is getting me a little antsy that it's just like testing the bottom here so many times. Eventually, it could break. So, if it does break, I want to be able to not be super aggressive and, I'll just let this 20-cent order fill. But if it doesn't break, I'm holding 3 contracts. So, that's risking $90, not a huge amount. But with that, if I'm, taking these percentage profits, I believe that's about a $60 gain there, adding all of that up. So, that's pretty nice. I feel good about that. And now, so I am going to switch over to GameStop. So here, this is the one that I've been covering for really just the past couple weeks. I have been covering GameStop for a little while, but I have been doing more shorter dated calls. And this is one that I did decide to participate in. I did learn a valuable lesson from it, but it wasn't a costly lesson, because I made a small amount of money on it, taking slightly more than a 0% gain there. But so with this one, this is the GameStop GME is the ticker, I'm sure, as we all know. $40 call that expires November 29th. So that's this coming Friday. So definitely risky. And really, I'm only including this here just because I kind of wanted to track it just to see, could I have made more money or did I exit at the right time? And so, part of the reason why I wanted to get out of this is because if we look over at the GameStop chart, it had been bumping into this level here. I hadn't seen anybody talk about it, but I have it drawn up there. Maybe it's BS, who knows? But there's this orange uptrend, which is based on the lows from before this big move in May. And then retesting the lows following that, or at least the lows over here. This one did go a little bit lower. And so from that trend line, did get a couple bounces from it. Did get rejected from it over here, and then now we're consolidating below it. So this to me makes me think this is a bull flag. It's going to continue higher, but it may also just be, with these big wicks to the upside, be showing some signs of exhaustion before this pulls back, maybe coming down to around 25 again. Ideally, I think it'd be nice for it to continue to hold above 27. Did close the week above 27, so I think that's great. But, we did get a pretty massive rejection from just below 30 with GameStop hitting a high of 29.80. So, that was kind of making me a little bit concerned that, this is not going to continue higher, and definitely over the course of a week, not going to be getting up to around $40 a share. And so one of the big reasons why I actually, this one and another one that I'll cover, I'll mention it when it pops up. But for this one, I was reluctant to get into it for one big reason. I don't know if you can tell what that big reason is. Just by looking at the data here. I'll give you a clue. Implied volatility. So that implied volatility, almost 200 over here, still, right around 200 when I was buying it. And so I thought, well, it's probably going to keep going, I'll just see. But then I started to get kind of cold feet, just thinking, IV was not low. This was a bad decision. So on the 20th, I bought one contract at 59 cents. And then the following day, actually kind of interesting, it shows one here and negative one here. But if I actually click on the sell, we can see a number of contracts. So I bought this one initially at 59 cents. You can also see that my position average went down. So, I bought that one at 59 cents, and then I bought another at 55, not thinking, I didn't think the 59-cent would fill. I didn't think the 55-cent one would fill. It did. And then I see it coming down, and I'm just like, well, crap, I think that this could be heading to zero. This could be a loser. I don't want to do that, especially if I'm documenting this. I also don't want to be a paper hander, but, I also don't want to be losing money. So, looking at this, I bought one at 59, one at 55, one at 40, and then I sold at 52, which was just above my average. And if I look over at the chart, maybe we could look at the 10-minute time scale. Why did I... yeah, I'm not really sure. I mean, I had to have sold up here, but I think, I was kind of recognizing that, hey, this is probably my opportunity. Probably because that 55-cent one was filled right away, and then it's like, well, it's lower than 55 cents. I should just get one more at least. Get one more, it starts going up, and then I break even. And actually, the high on that day was 62 cents. That was a pretty good trade. Wait a second. 51 cents. I'm confused. So, yeah, because that's like I'm not sure exactly. This is confusing me, the math that's here. But I sold, yeah. So it says buys, whatever. It's because, you put these together. Whatever. It's because of the numbers up here. I don't know if you can see it, but it's 52 times 3, whatever. The details don't matter there. But, I sold at 52 cents. I could have sold higher. That sucks. I could have made more money. I could have made more than $1.61. Dang it. But if we look at what it was on Friday, the high was 43 cents, so I would have lost money. And who knows what's going to be happening on this short week, because we got Monday, Tuesday, Wednesday, Thanksgiving, and I believe half a day on Friday. I'm not sure. But yeah, I could have lost money on this. I could be sweating right now. And so I'm not doing that. And the big reason that I got cold feet was because of implied volatility. I hadn't previously been paying attention to it before, but this was like a really good lesson for me in the importance of that. And I walked away in the green, so I feel good about it. But yeah, this one we'll have to see. Maybe, this ends up going to dollars, and I could have made a lot more money. But managing emotion, managing the psychology, this is a little too close for comfort for me, at least for me personally. And yeah, let's see. And I think part of the reason what, was making me realize, I'm probably making the wrong decision. I just see, all these posts, from the Bronx Viking, this one I'll show in a second. I think it's pretty funny. But here we can see that, there were a number of these posts that I was referring to in just a couple of days. And, I feel like, I was relying too much on that. And I think it's just because the expiration date is approaching. So I did not want to do that. But anyways, one of the posts that he did, which I found, call premium is flipped negative. That's one thing. I guess it was actually one from the day before on the 20th. I just found this to be really funny. There's some audio with it, but this is from Jurassic Park. Him saying, "Hold on to your butts." And it's Shrek. The Bronx Viking is always posting bullish Shrek. But GameStop got rejected from 30. So, I feel like that was all just, signs for me to get out of this one. And maybe what I want to be doing is tracking some GameStop contracts that are at an expiration date that I like more. And unfortunately, Unusual Whales doesn't have the data, for this. For these other contracts. So I just had to do this based on the 1 day from the options table. So this again is showing you the value that Unusual Whales provides, because I could have a lot of data up here for us to look at. But instead I just have the data from Friday. And, this is the values that I got from calculating in the table. And so, since there's nothing for us to look at on here, I'm just going to mention that this is the GameStop call. That's a $50 strike that expires June 20th. And so I feel like $50 is an appealing price target for GameStop because, let's see, there's this gap up here right around $50. So that seems, excuse me, I gotta drink some water. So $50 seems like a pretty reasonable price target, very feasible to me. And with the June expiration, that seems, like that's pretty good. But some things to note about this. Sorry, just had to clear my throat. Some things to note about this. The implied volatility is above 100, so probably want to see that cool off. Also, the price per contract is $5.58, right around there. So that's going to translate to $558. That is above the price that I feel comfortable paying for a contract. But if I track this, these will both go down, and then maybe that's a good time to enter. Or, maybe it starts to moon, GameStop really takes off, and, I'm left behind, but that's fine. This is for learning purposes, so I feel all right with that. The other GameStop contract that I'm interested in tracking is the same date, June 20th, but this is the $80 strike. And so why did I pick $80? So I guess one reason is because the premium's a little bit cheaper, although the IV is higher. So, I want to see both of those numbers still come down, but why 80? Why did I pick that one? And so the reason for that is if I do look over at the chart, we see this high that was hit on May 14th. That was about $65, $64.83. But if we actually look at the pre-market data, it went up to right around 80. So that is why I view that as, a feasible target. And I think, if we really take a step back, I think that GameStop could be going a lot higher. But, maybe not before June, but maybe we get some volatility, and with that, some spikes in the premium. So if this drops before those spikes, then maybe I could get one of these contracts and start accumulating them. But if that doesn't happen, again, I think that these are just kind of, contracts that are in my comfort zone as far as that expiration being, more than 6 months away. But anyways, the next one on here is going to be Hycroft Mining, ticker symbol HYMC. This is the $3 call expiring May 16th of 2025. So this is one that I am holding, but to be honest, I'm feeling a little bit antsy about this one because it hadn't really done what I expected. I did put out a video on October 20th going over, my thesis, why I feel that this could be going to $3 a share. So I'm just going to pull that up over here. And so that was really just based on, this being, excuse me, inverse head and shoulders potentially, thinking that from that move to the neckline, this could be coming up to above $3 a share, or even if it gets to that neckline, that purple trend line, that's getting to around $3 a share. Also, with the closing price on Friday being $244, which you see right over here, that's not a huge jump in price. But, if this was an inverse head and shoulders pattern, I would not have expected it to do this. And so I feel like this is either just taking up time, getting contracts to fade, to just bleed, theta decay. But, that's a benefit to having a contract that's multi-months into the future, because my contract's not really bleeding that much. But then I also did want to note this level here at 245. That's just a little alert that I have. I was, expecting it to kind of, hold these levels, but we've just been like fading below it. So yeah, I mean, this one might be a loser, but the last time I said that one might be a loser, that was Unity Software, and that one actually ended up being a winner. So I think it's good to just be patiently adding to this, at least for myself. And, as of right now, it looks like I just have about 5 contracts. We can see that I initially started buying, it looks like at 75 cents. got another one at 65, then 60, 50, 45, and I'm waiting for my next fill at 40. Did come to a low of 40 over here, but I don't think I had that order placed just yet. And then following that, 43 wasn't filled. I think I probably placed it on that day and disappointed by that. But let's come down to like 45. I could have gotten another one, at this price, still getting my average down, which is at 59 cents. But I didn't do that, and I'm just waiting for 40 cents to get filled. And if it doesn't get filled, that's fine. That means I'm making money. If it does get filled, then that's great. Then I'll place a limit buy at 35 cents. But I'm just, be patient about this, And so, yeah, this is just my little accumulation there in red as the price of both the premium and the underlying stock have kind of gone up and down a little bit, but really they've just been in kind of this range. There have been some spikes in volume, but those spikes have corresponded with, peaks in premium of less than $4,000. So that is, 2/5 of a DGen YOLO. So it's really nothing to go on about. But with those spikes, we have seen the open interest increasing, although for this last one, we did see it come down. So maybe that's a little bit concerning, but I do have until May. So I am really not too concerned about that. And so we will have to see, the high on Friday was 50. There wasn't much going on Thursday. As you can see, zero volume, no NA not applicable prices for the lows or the highs because none were traded. But yeah, so we'll see if 40 gets filled or if I'm able to start trimming at 59 cents at my 0% break-even trim, followed by the 10, 20, 80, and 100%. So yeah, there is that. And also, I guess I should note one thing about this is because AMC does own some of Hycroft. To me, I feel like it's kind of, an emotional play in that sense. And so I feel like it's good to not be so overexposed to stuff that you've got emotional connections to. You don't want to fall in love. And so this one, I'm in a little bit of love. So that's, again, why I don't want to be too aggressive in dip buying. Buy if it goes to 40. And if it doesn't, I'll take some profits over here. The next one, this was a valuable lesson that I learned last week. This is the ETF IBIT that now has options for Bitcoin. And this is the $100 call strike that expires January 17th of 2025. And I think the reason why I picked this one is just because I thought that there'd be a lot of volatility with Bitcoin going up to $100,000 a share. And with the premium, the price of this ETF being around 55, between 55 and 60, as you can see here with that green line. It's pretty far from 100, or just a couple months between now and the middle of January. And so I think in all honesty, kind of just got confused because the Bitcoin price is near 100,000 and this is $100. So a little bit confused there. But anyways, what you can see is that on the 21st, I did buy one contract at 55 cents. But then I started thinking, well, do I want to hold this over the weekend? Maybe Bitcoin doesn't get to 100,000, which as of right now, unless it is right now, has not hit 100,000. It's been rejected lower. And so, maybe we start the week with it around 95,000. My contract's then going to be worth less, and I only got 2 months with that ticking clock. So, I felt like this is one that was worth getting out on. And I actually had a limit sell placed at 70 cents, but the high on Friday was 65 cents. I then adjusted my sell to 65 cents and then recognized, and then I think I actually lowered it to 60 and then recognized I should just cut it at 55 because this is just going to keep going lower. And also another thing I did not like about this contract, I believe, is that I could only sell in 5-cent increments. So I couldn't have sold one at, 56 cents. And so I did end up losing 14 cents on this one. But again, no big deal. Valuable lesson learned there that, I'm happy to stack my Bitcoin. I'm intrigued by positions like Marathon Digital and miners and stuff like that. But as far as the ETF for options, I think I was potentially buying a top or near a top. And with this expiration looming, I didn't think it was worth it. So Yeah, but I mean, the implied volatility is pretty low, but the reason why I only have 4 days here is because it was just created, so, excuse me, this is the beginning of this ETF, of these contracts, not of the ETF, of the options contracts. So, I'll wait to see more data before making any trades with it. But this is one that I'm not going to continue up with, as you don't see any red at the top. But anyways, hopefully that's helpful. And actually, what I should do is I don't know why I have IBG here. So I guess only 21 stocks. But IBIT, I saw it, going from this low over here. Maybe it's bumping into resistance here. It did go a little bit higher, but then it's like, but I'm buying it, breaking out here. Maybe it gets up to 60. And then, my thesis, I think, for 100 was based on this Fibonacci extension going up to the 3618 at right around 100. But yeah, it just seemed like it was not very well thought out. And so one thing that I'm actually going to do, switch over to the crypto list. Bitcoin, it hasn't hit 100,000. I was looking at the 1 minute over there. I streamed it a little bit, but yeah, it looks like I posted that there while I was at work. The high was $99,795.34, according to the data here in Webull. So yeah, it didn't go up to 100,000. That was kind of my expectation. Maybe that happens during the week. Kind of what my expectation is, that right before Thanksgiving, it goes up to 100,000. So all of our degenerative uncles hear about Bitcoin. Ooh, it's above 100,000. I'm going to have to buy some of that. And then all of our uncles buy the top before it pulls back to 74. That's kind of what I think, because, it'd be funny. Because those degenerative uncles, I am not one. Formally, so that is okay with me to say that. But anyways, yeah, the IBIT here, I think I've said what I needed to say about that. So I will move on to the next one, which is Luminar, ticker symbol LAZR. So I'm looking at two different contracts. And so right now there's no data because these contracts are very new. And I actually didn't find any of them with these new strikes in unusual whales. So I just got this data from the options table. And so this first one that I will be tracking in the weeks moving forward is the Luminar, or ticker symbol LAZR, $6 put expiring on June 20th, my favorite date. So I'll go over why $6 put, but I did go over that in a video that I released on November 21st. The other contract that I'm interested in is the $15 call that is expiring May 16th. And so I thought this could be a nice way to be long and short at the same time, because basically my thesis is that Luminar could be pulling down to around 6 before going up to about 20. I just couldn't find any contracts with a strike of 20, so I went with the 15 here. But what we can see here, really not that much data. Implied volatility is high there for both of them, so I want to see that cool off. And really, I just want to see data from these contracts as we start to see them get traded. And so the kind of my thesis with it coming down to 6, I just put out a video talking about this 1618 at 611, thinking that, I don't think that it's going to be coming down to 611. Because the day that I released the video, the day of that reverse split, it looked like, there was this little cross here, this cross doji or dragonfly doji, big wick to the downside. I thought that this would be going up towards filling this gap right around $15. So that's where that call comes in. But we got this big reversal candle on Friday coming down more than 17%. And with that, I just think that this is going to come down to find support at these two levels, not only that 1618 at 611, but also this downtrend. And so that downtrend is based on the pivot low from April 11th, as well as the pivot open, I believe, from September 10th. And so that's how you get that downtrend. That was support multiple times, and over here when it was first formed. So I think it could be support again. I think price could be coming down to around 6. And so that is why I'm interested in a put to go down to 6. and also a call to go up to 15 for this gap. But also, I could see it going up to fill this gap right around $21. So, $20 strike call. But yeah, I don't have either of those because I'm just watching them now. So next week, I'll be able to give an update on both of these contracts. And so anyways, I was just talking about IBIT, going to switch back to kind of the Bitcoin space to talking about Marathon Digital, ticker symbol MARA. And so this here is the $35 call expiring March 21st of 2025. Again, a little bit sooner than I'd like, but there is, kind of, a little bit of a buffer there. And so I first started covering this because of this post from, I'm going to mispronounce his name, Tilray Tapan, who also goes by Volatility on Twitter. And so I really like his posts a lot. I like his analysis. I should say X. Let's see over here. This is when he posted that on the 8th. So that's really when I started to track it. So if we look over at his post, he's done a lot more updates on Mara since then, just cup and handle. So, that looked really good. And then also over here, the handle bullish engulfing, and it has since ripped faces off. And so back then on the 8th, we can look at the low and high for the premium. It was between 126 up to 162, and then the premium traded on Friday was 438 up to 625. So very clearly a very easy 2x here. So I just kind of wanted to point that out, give a shout out to Tilray Tapan, also known as Volatility on X. So I guess I'll hover over there so you can see his profile. So yeah, I mean, he's a great guy. I have a lot of great exchanges with him. And yeah, I think his analysis is awesome. So check him out. Yeah, so from this, I mean, it's just like, Bitcoin is ripping faces off with that Marathon Digital, Sailor. They're, buying the rips. They're not caring whether it's rips or dips. They're just buying. So, I think that there's just a lot of bullish stuff going on, but I think it might be getting a little overheated. As we can see, the IV is, right around, 150%. So that's getting pretty hot. So maybe we start to see a cool off. Maybe we actually see Bitcoin get rejected from either 100 or maybe up to 110,000, and then maybe pull back to 74. That was the prior high, find that as support, and that could be corresponding with some nice dip buy opportunities for Marathon Digital. But, I'm not going to spend too much time looking at the options data. I might actually just go over to the chart here, excuse me. And yeah, I'm not sure if I drew this during one of these videos or during a stream, but this is, kind of like inverse head and shoulders pattern, or, like, cup and handle or something, however, yeah, maybe it was cup and handle over here. Pulled back to retest it. That was a great dip buying opportunity around 16. And I actually, let's see, what was that date? When did Volatility post that? That was on the 8th, I think. Is that right? Let's see. He posted that on the 8th. Yeah, so that would have been after this date. But, for me, I noticed this. I had that alert there. I bought one, not call, not contract. I bought one share, and I swung it up here. And then I recognized, well, that's probably a bull flag. I should have held my share. I probably should have just bought calls. Yeah, and then it moved up. I kind of expected it to get like halfway to this target up here of like 14. $14 move. That's 27.09. But I was kind of expecting it to, go up a little bit, bounce, retest this, and then go higher. But it's just kind of done that, but like stretching it out. So stretching this up higher, down lower, and now it's up here. So it kind of played out as I was expecting, but, of course, a little bit different. But yeah, so I don't know that I would want to buy this. I'm really just kind of intrigued to continue watching it, as I don't have any buy orders placed, which I would have noted over here. But what we can see here is, let's see, we've got the premium and the underlying stock price increasing, pulling back, increasing again. And here we've got these spikes in volume, which this corresponded with a premium of $2 million. This one, premium of $3.5 million. So a lot of money there. Those are whale moves, you know. I don't know if they're blue whales, but they're certainly bigger than minke whales. And they're not dolphins. So yeah, I mean, this is just looking good, but we did see the total premium, the volume pull back on Friday. So maybe we see a little bit of a retracement. Maybe there'll be some dip buying opportunities in the week ahead. So I'll have to follow that. But, maybe not. With all those uncles FOMOing in after Thanksgiving, we might see this ripping some faces off. But anyways, the next one on here is Moderna. This is ticker symbol MRNA, and this is a $60 call expiring April 17th. And so this, I don't have a position on this. This is based on a video that Gareth Soloway put out via his channel Verified Investing, or, just through his personal YouTube channel, Gareth Soloway. And so there's that there. And, I can pull it up on the chart, and it was really just like pretty simple that it's been trading in this downtrending channel. And Gareth talked about it pulling down to around 32 or 30. And so I just thought, well, just kind of following that as my roadmap, I'll just put an alert at 32, an alert at 30. And so I'll keep, my eyes on that. Maybe it gets rejected as it bounces up above $41, closing on Friday at $41.11. Maybe it gets rejected around 45 and then pulls back to 32. So that might be a nice time to get in on this contract. But right now, I don't think it is. Even though, the implied volatility is pretty low, I just, the thesis is that it's going to test the bottom of this channel. And it hasn't done that yet. So why would I want to get away from my thesis? I don't need to be in this. I only want to be in it if it looks really good. And right now, I think I missed the bottom. But there might be a lower bottom soon. So, I'll wait for that. We can just see here the premium and the underlying, dipping and then going up. We can see a volume spike over here, which corresponds to 160,000. So not a huge amount of money. Well, I mean, for me, that's a huge amount of money, but it's not, in quarters of millions of dollars. So we also saw this other spike here. Let's see if the open interest kicks up on Monday, corresponding with this spike, which was about, over 100,000, looks like. Let's see, what was that point? 113,000. So, it's not nothing. That's, more than 10 degens. That's about 11 degens in a room YOLOing together there. So, that's not nothing. It's a crowded room. And then open interest going up and stuff. So, I think that this is potentially very interesting, but, if I miss the bottom, that's fine. So yeah, I am just going to, move along then. And the next one, this is one I'm really excited about. I've been excited about this one, following it for a while, is the NEO $8 call that expires June 20th. It's what we could see is there's a pretty big spike in the premium and in the underlying stock that has since pulled back. I've been accumulating here with buy orders now placed at 35 cents as well as 40 cents, which was my last buy that occurred on November 15th, just behind Ed's head there. And I started buying this. Let's see, at 90 cents, this is not a buy at 120. This is one buy at 65 and another buy at 60 to get 125. Two contracts there. And so, I've just been accumulating as it goes down. If we look at the implied volatility, it is below 100, so not looking too bad there. The implied volatility also coming down. So, I hope that one or both of these orders, limit order for one more contract, is filled. But, I don't want to be too aggressive with those buys because, if we do look over here, I believe I have 9 contracts. I just kind of organize this as like a rainbow over here. Effectively, I've got the, 5 orders for 0, 10, 20, 80, and 100, and then the multiples of, 100% there. And so we'll see if those get filled. Maybe I get antsy. Maybe it starts to get into resistance if I get up to 100%. And then maybe I just want to close the position there. But, my thesis with this, I guess, before I get into the data here, I'll look at the chart. Let's do that. Why not? So my thesis is, that we saw this big move up following, I think, Chinese stimulus. I think that there's a lot of fear of tariffs and whatnot, which, might just be words. There might not be as much action behind them, or it may not be as bad as what's priced in. So we've seen this pretty massive retracement. And I had been expecting price to come up to around $8 a share. That's why I have the strike there. And so really, if I take a step back, I think if I go on the weekly and adjust this to the log scale, we can see from these highs over here that were a high. This is the beginning of 2021, high of about $67, looks like $66.99. We see that thin red line coming down here, this pivot point over here. And, we almost got up to it here, but then getting up to it again over here would be kind of a confluence of levels there. So I could see that happening, but, I'm just going to switch this back to linear and the daily. And so, yeah, I could see price going up to $8 a share, whether that's an announcement of more stimulus, of tariffs not being as big of a deal. So, I feel good about this one. And also, I feel like a lot of people have been sweating down here. A lot of comments make me think that, the bottom could be in because there's, panic, there's blood in the street, stuff like that. I think that this could be a nice dip buy. And part of the reason why I say that is not just because I want it to go up, which, obviously I do. I'm holding some calls, but because it retraced to the 786 here at 450, also 450 being a psychological level, $4 bills and 2 quarters. So maybe that's bouncing, although maybe this could be a bear flag. So I'm a little bit concerned about that. Maybe this ends up being a losing trade in the end. But I think kind of like with the sentiment, the tariff talk, the stimulus, I think that this is going to be going higher. Oh, and, I should mention that one of the reasons why, this is one of my posts on X. So this is actually a repost from Mr. Chart Norris. He posted that Alibaba, ticker symbol BABA, daily candle chart. This is the exact chart you should trade. And so that looks like, it's finding a bottom here. And that bottom corresponds with this prior pivot high, suggesting that support. So, this could be breaking out. And so I wrote that it makes me think that NEO bottom could be in right around 450, which I was just talking about, which is the 786, which I was just talking about, and a level that I talked about weeks ago. We closed the week at 749. So this was, I think, Saturday on the 16th, I guess. And so maybe Chinese stocks getting ready to rumble. And so that's kind of my thesis with this. And also, similar to that AMC January call for this upcoming January, big spike in volume followed by open interest, just keeping that level on rising a little bit. And so that spike in volume here, that corresponded with over $250,000 on that day. So, I feel like that's a pretty nice spike. I've seen these other spikes in volume, but they were not too crazy with the premium over here. So, this is one that I plan to just continue to accumulate, but I'm also not sweating it because I've got, more than 6 months and my average is 65. But, that's kind of what's been killing me. The last time I did a buy was at 40 cents, and then it's just been hanging out right around 40. And, my average is just hanging out right around 65. So, I didn't buy any last week. I'd like to buy some more this week. So I'll be a little bit more aggressive, buy 2 contracts at 40 and 35 if they get filled. And if not, then that means I might be making money or at least breaking even, with that being there. Anyways, the next one, this is another one that I'm a little concerned about, similar to Hycroft Mining. This is the Plug Power, ticker symbol PLUG, $3 call expiring June 20th. So I'll go over my technical analysis of it here. Requests, I don't know why I have Palantir here. So this is another one I can delete. So it looks like I'm just going over 20 because one of those is actually not on the list. That's why it says 21 up there, if you can read that. So Plug Power, looking at this on the daily, I was kind of expecting this to be, inverse head and shoulders. Got this breakout here. I made a video about it, and pretty much the next day broke back below that neckline. in my, I have the bias of wanting this to go higher, but we are respecting this level of 186 which was important to me during this earnings call back in August. There was a pre-market low of 186, and so I kind of just set that as, if it goes to 186, that's a dip buying level. So like down here, there was a dip buying level. Right now, with it being just above that level, maybe we're getting to a dip buying level that we bounced from. And maybe, this fan that I have, these levels of support, these trend lines, which clearly have not been that significant, maybe this one is, as that does correspond with that magical number of 186. So that's what I'm hoping for, and that this goes higher, but I also don't want to be throwing tons of money on this, on those contracts, if, maybe it's going to be pulling back down to, 163 or 160, the lows over here. So, I'm a little bit skeptical of this one, so I'm a little being less aggressive. So I think I bought, it looks like 5 contracts beginning at 48 cents and then slowly adding more. And so, like over here, I did a buy at 35 and then another buy at 35. Rather than doing another buy at 30, I'm just going to be patient and wait for 25 because I'm not super confident in the chart anymore, unfortunately. But $3, why did I pick $3? There's a gap up here right around at 292, right around $3. And I believe the measured move would be putting it above $3. So that would be, I can just do that here for you. I think I deleted it because it just got cluttered, but just going straight up to that neckline, with that midpoint there, we can see that this is right about $3. You can see over here, up there. So that's where I have this thesis. But, it hasn't really been playing out that well, as we saw this, spike in, or this little hill, this mound in the premium as well as the underlying stock. And so my position for these contracts has just been like fading down, but it hasn't settled as low over here as the premium. So the average premium or the daily premium and stuff. So, I should get my average down more, but, my average is at 38 cents and, it's 10 cents lower. So 25%, more than 25% lower. So it could be better, but, it could be worse. So I'm not sweating it because I have until June 20th. Volume, we see a lot of spikes. With those spikes, we see open interest gradually increasing, so that's encouraging. Implied volatility was around 100 over here, when I was buying last. Then it dipped lower, and so now it looks like, we had these lows in, really, I guess, with that 92 there, that maybe this was the bottom, when there was that 25, which, for me, didn't get filled, unfortunately. So maybe the bottom is in with this and it's starting to pull around, finding, this confluence of levels here as support. Also, I didn't mention it, this 50% retracement from the low here to the high here, but I should probably adjust that to be the high up there. Maybe that'd be the 786, so I'll just do that really quick. Don't want to clutter it too much. But yeah, the 786, we did get some wicks to it over here. So that does support that thesis. And so what I'm actually going to do is delete that white line, that white Fibonacci, and then I am just going to adjust this to the high there, lock that into place, and I am just going to leave up the 786. As that looks like, we got a confluence of levels over here. So maybe we're going to see a bounce. And so, maybe I'm feeling a little bit better about it. But, since I already have 5 contracts, I think it is a little speculative. I'm not going to be too aggressive unless I get some more cash on the side. But right now, this is, how I'm going to play it. So the next one on here, this is one I'm really excited about. This is the Rivian $15 strike call that expires June 20th. And I'll show you why I'm excited about this. It really, corresponds with this volume here, but I did post to the channel, so I thought I'd share that with you guys. And so this was, I guess I posted it 4 days ago, over sometime during the week last week. I don't know what day it is because I'm working over the weekend. I'm recording this on Saturday. But so here, I posted this. Don't have time to do a video on it tonight, maybe tomorrow. I did not end up doing it tomorrow, which was a few days ago. But wanted to share that the Rivian call I'm tracking had a spike in volume of nearly to 12,000 on Friday, corresponding with greater than 1.1 million premium traded on the day, which was followed by an increase in open interest of over 8,000 showing up on Monday. So, it looks pretty strong to me, looks bullish. So, I shared that with the channel, and this is what that looks like, which, probably looks pretty similar to what's over here. And so, yeah, we've seen that spike in the open interest, and that has been elevated. And so, yeah, that premium over here, we can see the blue spike here corresponds with, about $1.1 million. So that makes me think, there's a whale here that's unusual, that spike. And I believe a lot of that was, I looked at it in unusual whales, and I think 950,000, I'm not sure exactly, but the majority of this was, looked like one order, one group of orders placed by, one individual or one institute. And so that seemed like it was pretty planned, well, this big spike here. So that gives me a lot of confidence in it. And so that spike was on, the 15th. And so if we look at the 15th, it's over here, the implied volatility. Implied volatility is not that high. It's in the 70s. So, this, has pulled back both in the premium and in the underlying stock price. This is a time to buy, and this signal makes me think that the bottom could be in. It could be starting to rally. And there are just a number of aspects with this, not only from Mr. Chart Norris, but also from volatility. And so, the first one that I saw was from October 24th, Mr. Chart Norris. Again, he likes those inverse head and shoulders. And then, more recently, I did a video on, potentially, I think probably following up on some of his analysis, but given my perspective, volatility posted over here, just, his, that, this looks really good. And so we can actually look over at the chart to see how it, is performing relative to that. So this was the start of November. So the start of November was right over here. We got this big move to the upside. This is Rivian. Yeah, weird. Okay, yeah. So it's, yeah, this candle right here, that big red one, it's this one right here. So maybe I can, something like that. Yeah, and this candle here is this one here. And so it moved up and then got rejected, kind of like what he's talking about, but it pulled back a little bit more. And so I'm a little bit concerned that this is a bear flag, but seeing that spike in that premium and stuff, and the open interest maintaining high, gives me a little bit more confidence with this. And then the more recent post from the 13th, 10 days ago, it's been a while, this I think is probably the weekly chart on Rivian. And we can see that, a hammer candle here. I guess this is like a spinning top or, star falling, I don't know, whatever, dipping signal. And, it's in this range. And so he actually had 1292 as a target. And let's see, I thought there was a follow-up I'm going to have to add to this during the video, so I apologize. But he did have a post saying that, 1292 was hit. If I look over at the chart, the high over here clearly pierced that line at 1296. 1292 was hit, pulled back. And so, but he followed up with it. So if I go over to his page, I can just do a little search and type in Rivian, and we can see that, let's see, these are from, I don't want the top, I want the latest. So from November 13th, helps us in making this, zoom to see the target hit, we good? I thought he had a follow-up on this, but maybe not. Yeah, so I guess he didn't, and which I'm actually surprised by. well, so we had this from November 12th. Yeah, so November 13th, handshake because, hit that level. But then he's also saying, bigger picture. So on the 12th, where was it? Yeah, it was right before the move. So yeah, maybe it's played out and maybe this is a bear flag, those big wicks to the upside. Maybe I'm making a bad decision, but when it all comes down to it, this makes me feel more confident. $1 million behind it. So, we'll have to see. And so for me, actually, seeing, maybe I want to, actually, no, I don't want to be going down a rabbit hole. But yeah, maybe I want to be a little less aggressive here with these buys. One at 90 cents and one at 95. But I don't only have 4 contracts, so I could be adding more. I mean, these are a little bit more expensive contracts than my other ones. But yeah, I do have until June 20th, so no stress, no worries. But yeah, I am going to switch over to the next one, which is one that I added to this. I think it was chatted about a little bit in the Discord. I think I also saw some stuff about Bitcoin related to Rumble. So this contract is the Rumble, ticker symbol RUM, $15 strike call that expires June 20th. And so I'll go over the chart, why I'm interested in this. But I have to say, things that kind of make me feel a little reluctant with Rumble is, one, you're watching this on YouTube. I post videos on YouTube. I don't feel that I get any issues with censorship other than people telling me I should not be posting stuff. So I don't have a concern about that for myself as a content creator, but I'm also not a very big content creator. And I could definitely see how algorithms can push people down different pathways that maybe they would otherwise not want to go down, or away from pathways that they would otherwise want to go down. And so I do see that as being an issue with YouTube. Also, with the Trump interview on Joe Rogan, I felt like that was a little bit fishy. But also some things that kind of rub me the wrong way about Rumble are that, Russell Brand's channel is on Rumble, but I always watch his videos on YouTube. He also promotes coffee that Rumble's doing rather than promoting what Rumble is doing. As far as their platform goes, coffee, that seems pretty odd. And then also if they're doing like Bitcoin stuff on the side, that also seems a little bit odd. And as a content creator, I personally don't view myself as moving over into the space of Rumble, because I view that if I am to expand, it would be onto X as a content creator there. And so I find that to be more of an intriguing pathway than Rumble. So from kind of a fundamental standpoint, as a content creator, I'm not as intrigued in this company. But there are some things that stand out to me about this. And since I have, actually, I'll go over the data second. I'll go over the chart first. That seems to make more sense. Also, I don't know why I have this here, SLCI, and this, I don't know why I have these on here. So I guess I'm only covering about 18, so that's definitely more manageable. But so Rumble, I added it here, kind of weird. I will add Rumble to this, and I want to add it to the request list. So now I think that's back up to 19, redeemed it a little bit. But so anyways, looking at the Rumble chart, what I see, I'm just thinking like, well, I see this consolidation doesn't seem like a bull flag. It just seems like it's kind of like moving around. Did get a really nice bounce here, but we did get a spinning top on Friday, closing lower than Thursday's high. So that makes me think that this is likely to be pulling back. So this is one I'd want to watch, maybe to add in on a dip if I do want to buy a contract. Do have this gap down here at 489, but hit a low over here of 492 on the 11th of September. And so, that's kind of, supporting my thesis of like this gap being left behind, and then, people FOMOing in when it really starts to break out. And so the thing here that stands out to me probably stands out to you is that there was this, falling wedge that we've kind of broken out from. And, from the low here to the high here, we did pull back to, really getting below the golden pocket, just above that gap. And, now kind of testing above the 618 there. So maybe there's some support, and this is a breakout from this wedge. It could be going higher, and I think it could be going up. Why did I say 15? Let's see if I take a step back. There are highs over here of like 1723. So, maybe it could be going up to 15. So I think that's kind of why I picked that as the strike. But this is also for June, so plenty of time. And so as far as this goes, I don't really have that much data here. I just got the last 5 days from Unusual Whales since I'm not a paid subscriber yet. But I definitely see the value. Hopefully the value of Unusual Whales is apparent here because of, how I'm applying what I get from there to here, and then also how I apply what I've learned from doing this and not had access to Unusual Whales, how I make ends meet over here, and populating stuff. Like the total premium calculation that I did earlier for you guys. But yeah, so here, if I didn't have this day, the 18th, when the volume was 5,000, I'd probably be like, I don't know, nothing really stands out to me. But 5,000 contracts traded on that day on the 18th. And with that, we saw actually, just like a, let's see, a little bit of a boost in the open interest, and the premium corresponding with that day was about 300,000. So that's more than $250,000. So yeah, I feel like this is intriguing, but also, that implied volatility is just too high. So, I want to see this cool off before I consider getting into a position. With the current high being, 115, it's pretty reasonably priced. But maybe that's just because it's going up to 15 when it's currently trading at, half that. So less than half that. So yeah, something to consider there. But yeah, this is one I will just be watching because, I'm kind of intrigued by it. The next one, this is one that, I took a little bit of profit on. Not a big deal, but I did sell one of my 4 contracts on Friday for a small profit. I'll go over in a second, but I should go over what the stock is. This is Tilray Brands, ticker symbol TLRY. And this is the $2 call expiring again June 20th because I like that date. And so I have been accumulating some small positions here. I'll go over the chart in a second. But, I did trim for a small 10% profit based on that table because I do have, a limit order placed to sell at 100% swing with my average being at 18 cents. I do plan on buying back if it dips to 14 and or 12 cents, just getting my average down and, accumulating more. And so, why do I want to accumulate more with this, nearly penny stock cannabis company that ventures into other areas like booze and whatnot? And there's one on here that I'm actually going to delete. There's Tesla on here. I'm not covering Tesla. But anyways, Tilray here, we can see that it's trading around $1.34, so it's below $2. And I was covering it leading up to this earnings call. I was long Tilray. But then we got this wick down. I cut losses here, and I made a video going over this wedge, talking about thinking that price would come down to $1.42. Well, we've come down to $1.42. We've broken below $1.42, and we've broken below this downtrend, the base of that wedge. So that seems kind of bearish. But one thing that we also did is if I draw this, Fibonacci extension here, so that's going from the high that was hit on July 30th, so it was at 215, coming down to the low here that was on that earnings day, and that was at a price of $1.45, and then up to the bounce high following that, which was hit on November 4th at a price of $1.82. From that, we can see that the 786 extension is around 127. And what was the low that we hit over here? 128. So I feel like this could be the bottom. Also, I've been getting some comments that this is dead, this is dying, stuff like that. Some things that stand out to me. A is this Fibonacci extension, 786, 127. Looks like we bounced from there. Also, just seems like a discount generally, especially with an expiration in June. If we look at the MACD here, that was, a lot more negative here. So the MACD, or that it was negative 0.07. Now it's negative it's more negative, but the difference between the MACD and the signal has gotten less negative. So over here, it was, let's see, the histogram is negative 0.03. Now it's negative 0.02, a little more than negative 0.02, negative 0.0177928. So this seems like it could be turning around, could be forming a bottom. So I feel like this could be going higher. And why $2 a share? Well, I'm glad you asked. It's because there's a gap up there at $1.99. So, I feel like this is just really, really nice. Rather than, holding my bags here, I cut my losses rather than chasing when there was this fake out break before rejection. I was patient. I waited for $1.42 rather than buying shares there. I started to pick up some cheap contracts. I don't have that many, so I'm not risking a lot of money. But, I stayed true to my plan, and I think that's going to pay off. So we'll see. Maybe I make 100% on that, which would be $18 profit with that. But then with these other ones, that'd be another more than 18. So, I feel pretty good about this. But then what we have over here, with the stock price, coming down here, not surprising. We see that underlying the stock price in green coming down along with that premium in blue. We see some spikes in volume. Most recently on Friday, we saw a spike in the volume, which corresponded with, let's see, a premium going up 20,000. So, that's two degens YOLOing. That's not a party. That's nothing crazy. So, take it with a grain of salt, but it is good to see that volume is increasing. And, if we just look at the trend in open interest, that has more or less just been increasing other than this one day when it went down by one contract. Which was not me selling. Even on the day that I sold my contract, the open interest, actually, we'll have to wait and see on Monday what that open interest changed to. But yeah, I did some videos on this, so you could check those out. From my 10% swing, I made $1.86 after fees, so less than $2. So not that exciting, but actually, that's more than 10% considering the position is 18 cents. So bam, take that. So I feel good about it. And, I just got to scroll over. I got a few more to go over, and then I'm going to wrap this up. So the next one on the list is Unity Software. This is the $30 call that's expiring February 21st. For me, a little too close for comfort. I had a position. I got out of it over the past week. And so I also added to my position over the last week. So I think there are a few contracts in there, so we'll have to look at that in a second. But yeah, I'm really proud about this. I tend to cover Unity Software before it runs, but then I tend to get out before it really starts to rip faces off. So I sold my last position at 70 cents, and then it's more than doubled that. So, I could have made a lot more money with this, but I was just getting uneasy with February approaching. And because, if we look over at the chart, which I just think is super beautiful, over here, it was just it was coming down and I was holding that contract. It's man, I'm an idiot. I made the wrong decision. But then I see over here, and I did just put out a video on this actually, it's coming back to me. All of this, these charts tend to blend together for me in all honesty. But there's this neckline from the inverse head and shoulders, also returning to the golden pocket. Confluence of levels, a bounce, makes sense. And so I sold, I think on the 19th and the 20th, I trimmed out of my position. But hey, I took an 80% profit, but that was only $31 for this stock, whereas with the FSLY one, my 80% was about $50. So, I feel good about that. I don't have any more contracts here to hold, and I don't plan on buying back in, and I'm actually not going to cover this one again just because I think the February 21st expiration is just getting a little too close for me. And, I think that there are other ones that I think this is going to be going higher than $30. And so $30, that's really just like getting up to the top of this shaded channel. But I could see this getting up to 45 in all honesty, potentially by June. So, I'd like to play that out, but I just feel like maybe, this is getting overextended from this bounce. It's up 37%, 36%, so maybe it's going to pull back to test the midpoint of that channel, right around $20, and then from there take off. So that's kind of my thesis, but I did not want to be doing the February strike or February expiration. Just that's a little too close for comfort for me. But I guess because I have a post here that I made. Oh yeah, this is one. So the Bronx Viking was posting about, all right, WTF is going on with you these last 2 days while GameStop is also pumping. And so that was going on. And so I just said, nobody cares because nobody liked it. Haven't noticed anything unusual yet. Contract premium is less than 1 million. So pull back to 20 seems possible. Opportunity. Do I smell something? Whales by the UDIP and premium spikes. Oh, so this is kind of like my, imaginary future scenario. So a pullback to 20 seems possible with whales buying the UDIP and then premium spikes. People start posting unusual activity again, heads to 30, if not 45. So that's kind of my thesis. And with that, I'm going to go over to a June 20th call, also being 30 because that was the max that I could find for this premium or for the strike. I would have preferred it to be a $45 strike, but it is pretty spicy. And actually, let's look over at the previous one. What was the implied volatility is actually not super high. It's not that crazy, so that could continue running. So maybe I would want to cover it, but as of right now, I'm saying I'm not going to cover that one. This one seems a little bit more appealing to me. $30 call expiring in June, like it's just more comfortable for me. I got to do what works for me, And with this, we just see spike in the premium and the underlying. And here we see open interest, falling. Surprisingly, let's see, open interest. So I don't get why this 7. Oh yeah, so 7. It dropped by 300, so it didn't plummet too much. You got to check the axes first, the scale. So yeah, there's really just not that much data on this one, but I could be watching this until June. If it pulls back to 20, that would be an opportunity. Like it did pull back to over here. The premium, the premium was on the 15th. This drop here to around 1734 right here. And the premium was below $1, so that's kind of interesting to me. So I'd be interested to do that if it goes lower. But yeah, so that's the last one there on Unity, and the next one here is the VIX, which is the volatility index. I guess I'm going to continue covering this one, but it seems like one I could be taken off the list. This is the $25 call that expires in February, and so. I really just kind of wanted this as like another layer of information as far as trading the UVIX goes. And I did just put out a video on the UVIX, which goes over how I've noticed that there are these like 2-week cycles. 2 weeks of red, 2 weeks of green, 2 weeks of red, green, 2 weeks, red. And so now we're in this 2-week period that's, green. So I'm kind of hoping that this continues up. With it being a short week, though, maybe it's not going to be so volatile. Maybe it'll be volatile after the short week. But yeah, I'm really just the shares that I have on the UVIX, which is 2x long VIX futures ETF. I'm planning on just swinging for 10 to 20%, so nothing crazy. But looking at the VIX, yeah, I mean, this looks like, it bounced here, but it did get rejected. So maybe it's going to pull back before bouncing again, going higher. So maybe I won't be covering this in next week's video just because I have too many. This video is now more than 2 hours long. So, you know, I'm not working next Saturday, so that shouldn't be an issue. But it is tough on days like today when I work, and tomorrow I also work early in the morning. But yeah, I mean, that is kind of, you know, my overview of my highly regarded option theses. I hope you guys enjoyed, and if you did, please make sure you like and subscribe. But, you know, as always, those are just my thoughts. If you did find them helpful, make sure you share your thoughts in the comments down below and subscribe to the channel for more videos like this. Thanks a lot for watching. Have a great night, you guys, and have a great week trading. Take care.